Okay, this video is all about appraisals. Now, appraisals are going to affect you whether you're selling your home or whether you're buying your home. And just to make sure you know what an appraisal is, all an appraisal is an estimate of value. That's all it is. Most of the time, appraisals are only good for one day. FHA appraisals can hold on to a home for about 4 months, but most appraisals are only good for one day. That's a good thing to remember when we go over all this. Now, an appraisal always affects a home purchase when you are getting a loan for your home purchase, or the person you're selling your home to is getting a loan for your home purchase. It's going to come into effect here in a second. It can affect you whether you're buying or selling. So let's talk about it from the buyer's perspective first. Let's say you agree to purchase a home for $300,000. Now, you go under contract on this home, you're the buyer, the seller has agreed to sell you the home for $300,000. The bank is sending an appraiser out to estimate the value of your home, of their home, because they're the ones putting in the risk, right? Now, the appraiser comes back and says, the home is only worth $280,000, $20,000 less than what you agreed to purchase it for. Now, what happens? The lender will only loan you, the amount of money based on the appraised value. So let's say you agree to put 3% down. It'll be 3% of 280 that you need to put down. However, you agreed to buy the home for 300. So what happens to the other 20,000 or more dollars? Well, someone needs to come up with it, and the lender has said that they will not because the home didn't appraise. So you, as the buyer, have to come up with the 20 grand. And that's why a lot of homes fall out of contract. You see sometimes homes come back on the market. They say financing fell through. This is one of the reasons why financing can fall through. Because one, the buyer wasn't capable of making up the difference. However, the second reason might be because they didn't want to. Now, why wouldn't you want to? Maybe you have the money in the bank, you just don't want to spend it. Now, the reason you don't want to spend it is because you're going to be upside down in the mortgage. You're going to owe more on the property than the house is worth, according to this appraiser. Remember, appraisals are only good for one day most of the time. So things to remember when you're looking at financing options is remember that the appraisal means a lot when you're purchasing the home. The lender will only loan you money based on the appraised value of the house. Now, an appraisal shouldn't be confused with a CMA or a comparable market analysis. A CMA is something that a real estate agent will do for you when estimating what you should list your home for. Now, that's a little different than the appraisal, right? That shouldn't be confused. You might hear it, BPO, a broker price opinion, is another way to call it a CMA. These are not to be confused with appraisals. These are something completely different that has to do with selling your house. But those are as always, just the start of describing what an appraisal is and how it affects both the buyer and the seller. Because the seller, you don't want the contract to fall through if the home appraises for less than the agreed purchase price. So you can't just choose the highest number always when you're selling your home. You have to think about it. You have to look at comparables. And hopefully this has shed a little light on appraisals. And as always, just reach out if you guys have any questions when it comes to anything real estate. Okay?